Welcome to today's Monday market update. Bulls, are we back in town or what? If you watched last week's Monday market update, you would have been given a bit of forewarning to what was coming. Of course, we cannot predict the future, but we try and look at data to give us the best confluence of information possible to make data-driven decisions, and that's exactly what happens. So it's always good when that plays out. Sometimes it won't, and that's the luck of the draw. But it's great to see bulls having such a great week after a dismal 2022 where bears were fully in control. If you were shorting the market, you'd be ecstatic. So there's always ways to look at this market in a positive angle. If you clearly see a downtrend, you can short the market. If you're a confident trader, you absolutely can short the market over a longer period of time. If you see a trend change, you get ahead of that, you can invest, you can also long the market as well. So there are multiple angles where you can make money off this market. And it is so important you do not sleep on 2023 and suffer that recency bias. I'll say it till the cows come home. Do not get swayed by what happened previously, because you will not be in the right frame of mind to attack what's coming next. And that is what I saw with my analysis of 2023, that everyone was bearish, thinking that the macro is going to cause another crash to the downside. Meanwhile, the market just does what it wants to do, locks back into that cycle narrative. Of course, we likely see the recession, maybe another crash after the Fed pivots. And I'm not going to go on the ways, that's more advanced analysis we cover out with our mastermind clients. But you can just see a lot of people were just saying, oh, we're still going down because of macro. There wasn't a lot of analysis there. So really important you're not listening to the noise, the sentiment of the time, because we were seeing bear euphoria and everyone just wants to believe it. They're in the depression phase. So really great example of that sentiment trough. Are we going to see prices below 20 grand again? I don't know. But if you look back on previous Bitcoin cycles, when we see a God candle like we saw the other day, especially on the weekly, when you see the trend break and whatnot, you realize and understand that there are a lot of people sitting on the sidelines, on the fence in stable coins, who are waiting for much lower prices to get in. This often causes a bit of FOMO and that move up. This is a hated rally. It is exactly what you want to see from bottoms in markets, changes in trends. And in our advanced video today, I showed exactly why the funding rate derivatives are just so important to this. It allowed Bitcoin to go from where it was at 17,000 whatnot at the beginning, all the way through to 21,000. It's because the market was so heavily levered short. There was a lot of pressure. People were betting to the downside. And as soon as spot buying came in and pushed price higher, all these people that had their stop losses just above the current price were getting wiped out, and it was pushing the price higher. And then you've got all these people just jumping in because they're like, I'm not believing this rally. I'm in disbelief. I can make some easy money on a pump, short Bitcoin back to oblivion. They start layering in harder and harder. All these shorts got obliterated on the way up. And that's what launched price higher, creating a short squeeze. You can look into this. It's pretty phenomenal how it does happen, but it's what allows those really big, fast moves in this market. And I'm really great to see Bitcoin waking up, because Bitcoin always reminds you who is boss when it wants to go. Hear a lot of people saying, flipping, Ethereum, all that. And while a lot of these altcoins and Ethereum will do incredibly well in this next phase, Bitcoin is king, and you need to watch its flow and liquidity dynamics to understand how this all flows. So crypto is volatile, and that's a double-edged sword. It can cut you on the upside if you are, betting it's going lower, and it can cut you on the downside as well. So that's why we love this market. The gains are so big, but so is the risk with the volatility. So just need to capture that, and also just dive into the course and understand the mindset, cycle positioning. If you were reading our newsletter and listening to our videos, you'll understand even last year, back into last year, and earlier this year, we were just encouraging you to look at the bigger picture. Where are we? Is under 20 grand solid value if you're looking ahead to 2024 Bitcoin halving and beyond? Are you looking to really position heavily in altcoins based on what history tells you? No, Bitcoin really leads the year prior to a halving. It really starts to make that run. So being aggressive in altcoins, depending on your risk profile, is totally up to you. But in 2019, for example, Bitcoin outperformed most altcoins on the market. So looking at that cycle analysis is really important. Let's dive in. Don't have much time. So 1 hour Bitcoin chart, to me, after this absolutely phenomenal rally, I think it was about a 30% rally off the absolute low over here. Looking to me like it's consolidating in an ascending wedge. Really nice pattern. And here you go, breaking out 2100 on the dime as we record. You've got to love to see that. To me, these patterns, if you see a really strong change in trend or a really strong move higher, if the trend is for real and it's going higher, these patterns break out following the trend. Exactly like we saw in the bear market, where every rising channel or wedge we saw kept breaking down lower and creating lower lows to the downside. This is phenomenal. This is starting to look really, really nice on the 1 hour. Let's pivot back to the daily. I'll just cover a few points off with you. Okay, so overall, this is that wedge that we've been charting for a very long time. Price very much contained in here. Very strong deviation out of the wedge. You've got to love to see it. The 200-day moving average, this is what I want everyone to just be a little bit cautious of. This is a very, very good area for a pullback to happen. The 200-day moving average, we have not been above it since the very height of the bull market, which is up here. So very interesting strength dynamics at play here. Last time we even tested it was back early March 2022. What I can see here, just based on the strength that is showing us here, and based on some things that I'm thinking in terms of my macro thesis, is that this has some legs to go. 25,000 looks likely. The 200-week moving average is at 25,000 as well. That would be a nice confluent area as we head into this Federal Reserve rate decision. I expect Powell to come in pretty hard in terms of his language, not with the rate rise. They're still going to raise rates, in my opinion. They might drop it a little bit more. That should also allow the dollar to rally a little bit, which create a short-term top in Bitcoin, is my thinking, before we go higher. But this trend is changing. It's very clear. It's undeniable. If you look back to 2019, you want to see that really clear disbelieving move where everyone just is still not on board with it. When everyone gets on board with the move and you see the longs really get on top of the shorts, is when you really want to be cautious. So this is the year prior, to the halving, 2019. Bitcoin low deviation from this, very low volatility that chopped down. Consider maybe this the FTX area where we dropped down, but here's that God candle up about, let's say from that point, 37%. That was such a clear, obvious move, deviation from the trend. It just showed us that bang, we're back in terms of creating that move out of the bottom. This does not mean we're heading into a bull market. In fact, I heavily caution everyone thinking that way. This is more just showing you that the market is in a relief rally mode based on also some macro conditions which are following. But yeah, that gold candle rips through the 200-day moving average and really didn't look back until we had the blow off top, the exuberance, which maybe we get to see this year in a pretty vicious rally. But then it's sideways into a halving. So you just want to be careful about going too hard too soon, and positioning for these mini cycles within cycles is absolutely imperative. There was another thing I just wanted to mention, and it looks like my computer's slowing. Apologies, guys. Let's just scroll over a bit more. There we go. Oh, please don't freeze. There we go. Okay, so an indicator I wanted to just show you quickly was the hash ribbon. I love the hash ribbon. It's such a great visual representation of where the miners are at, because a lot of the sell pressure over, let's say, full bear market cycles is coming from miners selling because they're suddenly insolvent and prices dropping, the difficulties rising. They have to just keep their heads above water and they go under. When it fires, it just creates just a slow burn of selling and just keeps pushing us lower. When you see it flash by, it means that the miners are suddenly out of that phase, they're profitable again. And that's what this price rise has done, put a lot of miners that were underwater suddenly back in the buy zone. And we're seeing it in the data that miners are now buying and not selling. And we've seen it signal buy on the hash ribbon as well as on the weekly. For me, that is such a bullish signal. It flashed back in the bear market in 2019 before that run up. It flashed at 20,000 before the run up to 69,000, the all-time highs. Such a good metric to watch. Now, just an additional point here before we flip on over to Ethereum super quick. Bitcoin launched above the short-term holder average price, which was around about 17,800. That is super important, because when we're above the short-term holder realized price, generally markets in a more bullish state of mind. It means short-term holders are suddenly in profit. Also, the realized price is the average buy price for Bitcoin holders throughout the market. And you can see here, whenever we're above it, we're in a very bullish frame of mind. Whenever we've ducked below it has been a time of maximum financial opportunity. And we were ducking below it back in 2019, 2015 bear market, and prior to that. And here we were ducking under it. Let me just drag that across so you can see it a little bit better. This has been an area of particular bearishness with FTX and whatnot. We were above it a little while, faked underneath it, formed it as resistance, come underneath it with FTX, and now we're back above it. Really, really interesting for me. There's a few other metrics that need to fire for me to be bullish, more aggressively bullish, I should say. Cover that with our mastermind clients. But the realized price is a really good metric to follow. Ethereum, yeah, this just looks like it is hunting for 1,700. It's also a bit of a volume gap above it, so it could run to 3,000 if it gets through 2,000. That's mega bullish short term, but we'll wait and see if that actually plays out. Ethereum, just wanted to highlight it because it has shown tremendous relative strength against Bitcoin, even in the bear market. So that has to be factored into how hard Ethereum might run at some point, because it didn't even make new lows in FTX. This was the lunar crash. This was FTX over here. Did not make that lower low, not even close. Bitcoin did. Almost all altcoins did. Ethereum did not. Now it's suckering higher. So a really, really positive move. Relative strength is such a good indicator of when things calm down and suddenly go the opposite way, when the pressure is relieved for the bulls and they have room to run. Those that have shown relative strength, think Matic, really have that explosiveness in them. So guys, I hope you've enjoyed this video. Make sure to stay tuned for our altcoin Bible, our Friday session, and join our newsletter. If you have not subscribed to our newsletter, last week's newsletter was put out with Tristan on Casper fundamental analysis. The week before, I put out my analysis on why you shouldn't sleep on 2023, about the Bitcoin halving and why the macro is setting up really positive for me. And then the next week, we really, really roared. So these insights that we're sharing are really, really, really valuable for you guys. I just can't emphasize enough for you to take advantage of it in these periods, because money is made in disagreements. When everyone says it's dead, it's crashing, it's over, is when you need to get really, really interested, and not interested when things are in a peak state above 100,000, above 200,000, when it's too late. So guys, have a wonderful day. We'll catch you again later in the week. Bye.